I've been running a prop firm for over 3 years, and after funding hundreds of traders and seeing the data on thousands of traders, I have come to learn 6 uncomfortable and brutal truths when it comes to trading. I've learned these through running a prop firm, but also being a trader myself, using prop firms in 2020 and 2021 to quit my job and trade full time. And so my hope with this video is that these uncomfortable and uncommon realities of trading will help you break free from the lies that are told on social media that make you think that trading is easy, that flipping accounts is the way to success, that backtesting is going to be the key to success. So hopefully by the end of this video, you don't hate me, that it will help you get one step closer to that top 1% of traders that use trading to live the life of their dreams. Lesson number 1 is that your trading strategy does not matter. Now, I know 99% of all content online is about trading strategy, whether it's scalping or swing trading or ICT. Everybody wants you to think that they have the key to success, and it's only their strategy, their system that will help you make money. But this is not only not true, it's actually the opposite of the truth. The truth being, it does not matter what your trading strategy is. Almost every trading strategy can make you money. The difference, however, between those who make money and those who don't is not their strategy, but it's their execution. And of course, it is their risk management. At Lark Funding, we have paid out hundreds of traders, and you would be mind blown to see the data on how they trade. The truth is, when you dive into the numbers, almost every single successful trader that we have ever funded, that we have ever processed a payout for, has traded in their own unique way. We have had traders make a ton of money by scalping. We have had a ton of traders make money by swing trading. We have had a ton of traders make money by trading only one pair, and we've had other traders who had huge success by trading 10 or 15 different assets. Your strategy is not going to be the difference between whether or not you succeed and whether or not you fail. You see, like I said, every single strategy for the most part can succeed, can be profitable. But the difference between those who make money and those who don't is simply how well they execute that plan. Do they execute with the law of large numbers? Meaning, after a few losses, do they stick to their strategy? Do they stick with their system? That's really what it comes down to, of allowing the law of large numbers to play out, to execute your strategy and system regardless of your emotions, regardless of the short-term results. That is what's going to make the difference. Lesson number 2 is that influencers are liars. Now, of course, like all things in life, there are outliers, but there is a reason that at Lark Funding, we don't work with influencers. If you go on Twitter and you look at some of the most popular prop firms out there and you scroll through their affiliate section, they have a ton of affiliates, not just affiliates of somebody who promotes the company, but literally a social media profile, an influencer who pushes and promotes the company. But at Lark Funding, we don't work with any of these influencers, because when I started the company in 2022, I thought, this is great, let's work with some influencers. But unfortunately, the uncomfortable truth is that 99% of influencers are not only unprofitable, but they are lying to you. Now, I'm not going to call out any specific names because I don't like to speak ill on anybody specific. Hopefully, you can do your own research and whatnot. But even if you do your own research, everything online on social media, you have to take it with a grain of salt. You see, I see time and time again, influencers that we originally worked with firsthand actually will post payout certificates, $5,000, $7,000, $10,000. But you don't know how much they spent on challenges. They might have earned that $10,000 payout, but they might have spent $9,000 on challenges or $11,000 on challenges. And the transparency in this industry is so lacking. And it's really unfortunate because not only do these influencers often hide how much they actually spend on challenges, but the reality is what's almost even more frustrating is that the vast majority of them are gamblers. Now, again, I started to think recently, to be completely transparent, to grow Lark, maybe we should work with more influencers, right? All the other platforms are doing it. Maybe we should do it. So we reached out to a few influencers on Twitter, and, we gave them free accounts in exchange for them trying out the platform, sharing their feedback, posting about us. And 2 out of the 3 influencers that we sent accounts to literally full margined, 100% margined the account, just completely gambled on it, and they broke some of our risk rules. We don't want traders to be risking 100% on the account. We don't want traders just gambling it, because one, yes, you could fail in a single trade, but also 2, if you make an insane amount of money, it's not realistic because it's not what you would actually risk on a personal account. It's just, we want traders that are risk managed. And it was actually really insightful to see this, because it's the exact same thing that happened in 2022 when I started the company. The exact same thing happened. So these traders online that say they're successful, they might be successful gamblers. Sure, but I'm saying this so that you can take everything you see with a huge grain of salt on social media. If some influencer has a neck tattoo with Rolexes and Lambos, there's a very good chance that he is not a successful trader. Now, again, maybe that's not nice to say, maybe it's controversial, but I don't want you to think that trading is easy because of what people are saying online. I don't want you to change your strategy, a strategy that might be working, simply because it's taking you more time than influencers make you think it's going to take. Because that was me when I started trading. I thought something was wrong with me. I saw all these people making money online when really they were hiding behind something. It wasn't accurate trading results. So I don't want you to fall into that same trap of thinking I'm doing something wrong. And the reality is, trading takes a lot of work. It takes a lot of time. And influencers, for the most part, are either lying or they're just gambling on these accounts. Lesson number 3 is that less time in the market equals more money. Ask yourself, why do most prop firms have minimum trading days and consistency rules? It's very simple. The reason that they do is because they know that the more time you spend in the market, the less money you're going to make. Point final. That is it. At Lark Funding, we have no minimum trading days. We have no consistency rules because we understand this. The more trades you take, the less money you are going to make. The market is unpredictable. The market is volatile. The traders that do the best, and I've seen it time and time again, are the traders that are snipers, that wait for the perfect opportunity. And then when it comes, they strike. They get into the market, they get out of the market, and then they wait for the next setup. They're not hunting day in and day out for tons of setups. It's all about quality over quantity. And so just realize this and the implications that it can have on your trading. The more time you spend in the market, the less money you're going to make. And for newer traders especially, this is something that's so important to understand, not just intellectually, but emotionally, because we think, oh, I want to become a better trader. I want to improve. So I need to be doing something. And unfortunately, that something is usually taking a trade. It's forcing trades. It's looking at setups that you shouldn't be looking at assets that you told yourself in your trading plan you weren't going to look at. Remember, less time in the market equals more money. Lesson number 4 is don't generalize, but specialize. When I first got into trading, I always went back and forth between trying to decide, should I just focus on 1 or 2 pairs and master those? Or should I have a watch list of 15 different assets? I always went back and forth. So what's the actual right thing to do? Well, based on the numbers that we have, the traders that have earned the most money, when I firsthand have looked at their trading data and what they did to earn these payouts, the majority of traders generalized. They didn't specialize. Now, this means, for the most part, that it comes down to quality over quantity. The best traders, they are masters at a couple of assets, usually between 1 and 3 different assets. So it could be, gold, it could be Euro US, Pound Yen, whatever it is. Usually, when we go to process a payout and we look at the trading data, there's only a couple of assets that were traded. They wait for the best setups. They understand how their preferred asset moves, and they know the ins and outs of it. They know what news events move it, and they're just complete specialists and snipers in this asset. And so lesson number 4 is specialize. Try and become a master of something rather than just generalize and trade a little bit of everything, but to not actually be world class at anything at the same time. Lesson number 4 is that 25% of traders are gamblers. Again, I've been super transparent on this channel with all of the data and metrics at Lark Funding, and 25% of traders fail their evaluation because they hit the daily loss limit. The daily loss limit is 5% across all of our programs. And so the reality is, the truth is, there's never under any circumstance a reason to hit the 5% daily loss limit unless you're a gambler. Listen, if that is what you want to do, if you prefer to spend a bunch of money on prop firm challenges rather than go to the casino or bet on sports, that's your prerogative. That's fine. It's your money. You can do what you want, of course. But I make these videos and I have this channel, I make these videos and I share this for those that want to trade, that want to learn the art and craft of trading, not just gambling on these accounts. And so if you know that only 10% of traders pass a challenge, well, how can you get into that 10%? Well, remind yourself that you can be better than this bottom 25% of traders that are hitting the daily loss limit. It all comes down to risk management. Of course, you see risk management on YouTube, you click away, you don't care. It's boring. Yes, it's boring, but that's why it makes the difference, because nobody pays attention to it. So if you want to separate yourself, remember, 25% of traders hit the daily loss limit. Don't let that be you. Lesson number 6 is that challenges are easy, but payouts are hard. I found when I took my prop firm challenges that I really felt it, that there's a big difference between being on offense and being on defense. And it can make all the difference when it comes to passing a challenge and when it comes to receiving a payout. Now, when I say challenges are easy, they're not. Challenges are hard, but what's even harder is earning a payout. Now, understanding the difference between offense and defense, I think, can make a huge difference in your trading. Now, what I mean by this is when you're taking a challenge, you need to be on offense because you have a profit target to hit. Especially back in the day when there were 30-day time limits when I was trading, you certainly had to be on offense because you had a clock running against you. But when you're taking a prop firm challenge, you have to be on offense because you have to hit that profit target. But the way I like to approach funded accounts is actually being on defense. Defense in the sense of I need to protect this account. I'm not striving for a 10% profit target. I'm trying to protect the account and I'm playing defense. And I think the very best traders, especially those that I've spoken with, they agree. And it's really about understanding when to fluctuate between the two, of understanding, okay, I need to push a little bit right now versus, okay, maybe now I need to play a little bit of defense. I need to protect the account. I need to be a little bit more conservative. Understanding the difference between the two can make all the difference. And unfortunately, most traders only focus on the offense part, which is why it's so difficult to receive a payout. When we send out a new funded account, we literally say in the email, don't get too excited. You've proven and shown you know what to do. Stick to the plan, maybe reduce your risk in half, be conservative, there's no rush. But unfortunately, I've seen it all the time that traders get so excited with that funded account. They don't have that skill set yet of playing defense, of protecting the account. They just go full offense, and it usually doesn't work out that well. These 6 lessons didn't upset you. We've been running Lark Funding for over 3 years now. No news restrictions, no consistency rules, over 3 years of on-time payouts. We would love to have you. Check us out down below. I'll see you in the next one. Until then, peace.